Good afternoon and welcome back. My name is Kyla P. Barnes, your financial chef and coach here with Jean Glaze Art and Finance. I wanted to spend a little bit of time this afternoon. It's not too late, it's not too early to just cover a few of my observations I've been seeing here in the market. I believe that maybe if you too are on the trading floor, you have been seeing some of these observations as well. These observations to me seem as though they could really save you some money, some heartache, as well as secure a good night's sleep. So let's just go ahead and get into it. All right, so the first observation is I recently read a news story that said NVIDIA was the pulse of the market and the king of stocks. But if you go back to the most recent earnings that NVIDIA has had, they have not moved the market, which means that if you are trading NVIDIA as a precursor to a mini index, you may find disappointing results. Or second point. The Bitcoin market before the election was moving with the markets, and then post-election, it just broke out. There are a few commentators and analysts that predicted this, but as I mentioned in previous videos, Bitcoin is not my trade. So even though I monitor it, I don't necessarily trade heavily in it, and at this time I have no coins. Bitcoin is something that has, in the most recent days, began to create volatility in the equity space, which means that there's only a finite number of traders. If traders are propelling Bitcoin higher, then that does mean that it's going to appear as though the equity markets have stalled, even though they have not. Gold and silver and a few of the other metals post-election have not performed. The Federal Reserve has cut rates twice or three times since June. However, we're not seeing much appreciation in the price of bonds as well as the yield for the long-term bonds. We're seeing the opposite, which is that the dollar is still relatively strong. And we're also seeing that short-term yields like the 7-month, the 5-month, as well as for like 1 year or lower for treasury bills is still considerably higher. If this stays the case, then you will see volatility or lower prices in gold and silver. If you are looking for yield, this would be the time to go to your broker, your bank, or the place where you competitively price yields to capture or freeze that yield in your account. And what I mean by that is that you will be buying that bond or that certificate of deposit and putting it in your account, and you'll be picking up a coupon every month or every quarter, even semi-annual for a bond that will ensure that you'll be able to produce income to your portfolio. I was able to find a JP Morgan Bank, a Deutsche Bank bond, a Verizon bond, Duke Energy, Philip Morris, and Verizon bonds, which are the utilities that all of us use here in the United States. It will vary, but if you have an apartment or if you have a house, you are paying utilities. And a lot of these utility bonds at this time are still paying high yields. This is a good time to go into your brokerage account, click on fixed income, and see what's available. The market post-election this year compared to the market in 2016 is far more volatile. What that means is that if this market was to continue going and never pull back, we would be heading into the same scenario as the tech bubble, as well as, while the conditions are different, the subprime crisis, which occurred in 2007, 2008. I am saying this to say that if you have some gains on the table and they look good, they look juicy, you've monitored them, it's okay to take some gains off the table and leave just your principal on, or just reduce that position into the new year, because you never know what's going to happen in December and January. Not listening to the news has actually produced more funds to my account. So what I mean is that I typically read about 20 to 30 stocks, news articles a day. And I also will sit for maybe like 1 or 2 hours throughout the trading day, trying to listen to commentators that have a more expert opinion, or maybe they just or, talking head for JP Morgan, US Bank, or Schwab Center for Research, or Fidelity Center for Research. I listen to these commentary because they are still operating at an institutional level and they're speaking on behalf of their firm. So I can't rule out their opinion because their institutional float, or the amount that they could buy of a certain bond or a certain stock, will move the market far more than my $1,000, $2,000, $10,000 order. But I have found pre and post election that it has been more profitable for me to just scan articles and then do my own research. Research in this period of time, if the market does not pull back, or even if it does pull back and you're looking for some investments of value, research is going to secure a good night's sleep. Research is also going to be able to show you if a stock is in demand or if a stock is not in demand. If a stock is not in demand, then that gives you an opportunity to research why. And if you believe in this company and you know that maybe they're just out of favor for right now, it gives you a good buy-in opportunity. One example for me would be probably UPS. About 2 or 3 months ago was significantly lower. I'll try to bring a chart up here. Also, Etsy a few months ago was significantly lower. Shopify a few months ago was significantly lower. And Target over the last year from the summer has been significantly lower. So I edged into these positions really slow. I bought maybe 1, 2, 3, 5, 10 some shares at a time until I built my position. Also, Bitcoin and Bitcoin-like ETFs were significantly lower on this year. And then as we got closer to the election, as the Fed became more active, you found these Bitcoin ETFs just taking off. But I'm saying all this to say that if you do find something that is of value in these markets right now, or even on a day when the market is really high and this particular stock or ETF is down, go do your research, ask yourself why, figure out when you want to buy in and when you want to sell. That is going to guide profitability in your trade. I, every month, take a look at the sector-based performance. And I do this because sector-based performance will group together all of the equities out there that have defined a sector, which most of them should, even though some operate in a different manner outside of their section or their sector. But I look at the sector report every month because that gives me a gauge for where the interest is and where the interest is not. As a value trader and also as a trader who has been doing this for a really long time, I have found that looking at the sector report helps you to identify possible buy opportunities. It also helps to navigate you away from the sectors that may be getting too hot. At this current time, the energy sector is down on the month, in addition to real estate, materials, and healthcare. I'm reading off my notes down there. But year to date, I see that energy is up 13.11%. Real estate is up 11.23%. If you go back earlier in the year, real estate was negative on the year. So if real estate was negative 5% and now it's up 11.23%, that means you made the 5 back and the 11, you booked 16%. That's an example of a contrarian trade in which you used your research. You went out there and found, is there still a market for real estate? Yes. Is it out of favor at the top of the year? Possibly, yes. But is it going to be out of favor perpetually if the Fed never cut rates? No, it's going to recover. So that's an example of a contrarian trade. Materials was also down on the year earlier, but now it has recovered up 10.50%. I have recently been seeing more individuals talk about trading options. Options are a great generator for wealth. I won't deny that. I've been trading options for probably about 17 years. Options are inconsistent. The best way for you to make money in the options market is you have to know the direction of the stock. If you know the direction of the stock, options can be for you. You have to know when you trade options, the buy-in, the sell, how long you're going to hold it, and duration. If you cannot map that out and you're only going on hope, you are going to be in for some disappointment. If you can guess where the stock is going, if now is a good buy-in price, where will it likely go to sell, and then if you're able to say it'll happen in like 30, 60, 44 days, or maybe in a year, then that would be an option trade for you. Because you did your research, which was a previous point I mentioned, you're going to put yourself in line for success. So just be aware that options are perpetually time decaying assets. Unlike a stock, options one day will go to zero. Everyone needs to have a stock list. A stock list allows for you to track certain stocks and determine if you want to buy them or sell them. The easiest way to make a stock list is to choose things that are relevant to you. So for my household, this house is financed by US Bank, so I trade US Bank. Also, many of my friends and clients use JP Morgan, so I trade JP Morgan, or the ETF XLF. Our water is through American Water. Our electricity is through Duke. And we shop at Target, Walmart, Kroger, anywhere really that has value, groceries, and really great prices. That would be a small example of our stock list. You may have a different stock list. You may per se have a card through Capital One. Okay, that's a tradable stock. Or maybe you have a Visa card in your wallet. That's another tradable stock. Maybe you drive a Tesla or a Ford or GM or Rivian or any other car out there. But a stock list helps you to determine what you're buying every month, what you are financing every month, and maybe get some help along the way by trading in that investment that is relevant to you. I have found a lot of success over the last 2 decades trading what is relevant to me. As a short personal story, I won't make it too long. When I was in college, I just simply didn't have any funds. I didn't have any scholarships, and I did, however, have like 21st Century Scholars, and I think I also had a small group scholarship or placement, and I think I had maybe National Honor Society. But outside of that, my college financing was all on me. And so I'm saying this story to say that over that time when I was in college, I had to put a lot of my bursar bill and money on a credit card because I didn't have any equity and I didn't want to leave school. I amassed over $12,000 in interest on that credit card because I simply did not know the game about credit. I didn't know about the minimum payment. I did know that if you run something up, you have to pay it back. But I was not really clear on how I was going to pay this down because that wasn't my immediate goal. My immediate goal was to stay in school and pay my bursar bill. But I paid over $12,000 in interest during that time that I was at Indiana University, Bloomington, financing my education. When I got out of Bloomington and took my first professional job with Royal Bank of Scotland, or RBS, I was then aware of how much interest I had accrued. And then I became more interested in what can I do to maybe get some of that interest back. My thought via a series of different people, channels, literature, as well as just my own personal assessment, glory to God, was to trade the company in which I paid interest to, which at that time was MBNA Bank, if you remember that. And so I did. I started trading MBNA Bank and was able to make back over 7 years, $10,000 worth of interest. One other thing which is going to culminate this video is that if you are going to trade and try to make a thing of it and you are not a buy and hold type of investor, you are going to need to have to learn how to read charts. Charts are not hard to read, but you do need to understand when something is a buy and something is a sell. I have used for several decades the Bollinger Band, which is very easy to see. The top band is a stock that is overbought. The middle band is a stock that is experiencing half of its range. And then the bottom band is a stock that is oversold. I use a 200-day moving average from a standpoint of strength because there are 365 days in a year. So if a stock goes above a 200-day moving average, that does indicate strength. I also use a RSI, a relative strength index. That's a momentum indicator. Just like with the Bollinger Band, when you go to add that, it will usually stack in at the bottom of your chart. The top line indicates overbought. The middle line indicates a variance in the overbought and oversold conditions. The bottom line indicates when something is oversold. I am more likely to buy something at an oversold level than I am to buy something and hope that it goes high. Most of my trades are not based on or facilitated by hope. You have to have a strategy. I also like to use the stochastic slow oscillator. It too is a momentum oscillator that shows that something is overbought, which means everybody's buying it, they can't get enough of it, and then oversold, which is where I usually come in. When you buy things that are out of favor, it puts you, in my opinion, 30% ahead of the curve, not above, because when that security turns, you get the negative return back to be positive, and you get the forward momentum as it goes up. So these are just some of the market observations that I've made so far year to date. Typically, I'll just write these down in my phone on a piece of paper. I apologize for not being more available in these videos throughout the year, but Jean Glaze Art and Finance is growing. We are expanding. We have classes that are directed by me, and I also have personal accounts in which I trade on. So it does absorb the time in addition to having a growing family. So for now, I will say if you need me, ping me, right? Like and subscribe to this video or wherever the icon will be, and I will see you on the trading floor.